Learn Accounting Podcast by Professor Accounting, episode 11, Provision for Doubtful Debts, Q&A. A question was posted over on Student Rooms regarding an AQA question from the textbook with regards to questioning the answer at the back of the book. This is 15.7 regarding provision for doubtful debts. If we look at the question, I've reproduced it here in Excel. Most of it, it's got some extra bit of information about some of the criteria such as debtors. The main thing I want to look at first is in the criteria states about debtors where the provision for doubtful debts is maintained at 5% of the debt balance within the ledger, and it states that the balance of debtors, which is 10,000, hasn't yet taken into account the bad debts written off of 178 and the bad debts recovered of 261. So in terms of calculations, I can see the original approach by the OP, which is here. We get £481 and 10 pence. First of all, as a decimal, which is very rare in AQA questions, and that value which you're claiming is the new provision. I can see your method. You've done debtors minus the bad debts written off, then times by 5%. So the only thing to correct here is to just don't include the 178. Don't include the bad debts. The reason why is just based on the policy. The PDD is £10,000 times 5%. That's what they state in the question, as in 5% of the debtors balance. That's what you have to use. I do understand why you have used the 178, because in true in fact that the debtor balance should actually be lower by 178. It's just that the debt account hasn't been reduced in the hasn't been reduced yet. So this question is purely about this this topic rather than producing the final accounts. So if PDD, which is correctly calculated now as £500, that's new PDD. The £700 there is called the existing, which is, we have to know that anything in the ledgers regarding PDD is the existing PDD. And so the next section to do is work out the change. So a little kind of method I use here was the existing, which is 700, the now, which is the new, so it's a change of £200. Now I know it's a minus, but I've just worked out the maths change. So either way you do it, just look at the number, it's £200 difference, then decide whether it's an increase or a decrease. So if it was 700 and it's now 500, it's gone down, so it's a decrease. So decrease of £200. So in the answer at the back of the book, it's got here, it's a reduction in PTD, which is £200. So if we just make this a bit bigger, I can just give you a bit more information. Let's just comment upon what we're doing here now. This is for the £200, a reduction in PTD. This is a decrease in expenses. So if you reduce PTD, then that's a reduction in expenses. However, the way we have to think of it is it's an increase in income. That's the way you tend to think of it, because we add the value £200 to gross profit. So that's going to be an increase in net profit. Okay, that's the main bit. I think that was the query, but I'll just finish the question. Bad debts written off, that now needs to be taken into consideration, because states in the question that it's 178, that the 178 hasn't been used to calculate the net profit. So if we write off a bad debt and now include it for the profit, it's going to increase expenses. So an increase in expense is going to reduce net profit. So if we're reducing net profit, we are changing profit, so that's going to be a minus. Bad debts recovered is 261, given the question, and that's it's bad debts recovered is income, so it's an increase in income, so it's going to increase net profit. So it stays positive. So the overall change in net profit is positive 283. So in terms of the original question, we've got original profit is given. The change in net profit is what I worked out over here, 283. So the revised net profit now, the answer, which is 18,373, which is what the back of the book says. So I can't disagree with the back of the book. The only thing I think it's there's an issue is just I suppose the lack of clarity and the lack of explaining the calculation in the back of the book for the £200 change in provision. In terms of the approach, I've done a podcast, because I tend to teach it this way, regarding the procedure for working out PDD. So I'll produce in full podcast about the criteria and the approach of working out PDD, which is extremely useful for OTR students, but also you can adapt it for AQA students as well. So hopefully you find this useful. OP, original poster on student rooms, and anyone else that's completing AQA, if you find this question and you were not sure of it, hopefully you find it useful. So I want to thank you for stopping by, and I'll see you again for another podcast from Professor Accounting.